Roy, we're seeing still very strong demand indeed for Safaricom as well as Equity Bank. I mean, Equity Bank up almost a tenth yesterday. Is there any specific reason why the stock was up quite so strongly, particularly also in very significant volumes?
Probably, I think equity is basically participating in the feel-good factor that's in the market at the moment. The equity rally has been quite strong, especially in the month of January. Taking into account, it was probably by about 10%. There is nothing so specific with Equity Bank that has happened in the moment. I think it's more or less some speculation that's coming to the market.
And also the interest that we've been seeing continuing into Safaricom, that stock yesterday up 6%. How is it opened up today?
At the moment, in the morning, it had dipped lower. Probably demand could be waning, but it was more or less actually expected. Safaricom, Equity, Kenya Airways, as well as Mumias of some of the stocks that have actually encountered quite high price spikes, and I think it'll be time. It's a matter of time until probably supply dwindles a bit, and we could see some corrections in those counters.
Leon, you watch the Kenyan, Nigerian markets, the African markets. Could we ascribe some of the strength that we've seen coming into the African markets to be part of the global trend where we have seen investor confidence returning, particularly into the supposed riskier assets like the African markets?
Yeah, well, you rightly point out, we've seen a return to risk appetite. We've seen that across the globe. I mean, the one country that sort of lagged it is South Africa. But I would not be surprised that that some of the demand that we're seeing in the equities across the continent is very much triggered by the fact that commodity prices have been doing well, the Chinese economy is doing well, those benefiting from growth in China are likely to benefit. So yes, I think it's all very closely related. Yeah,
but then the surprise for me then becomes we are seeing the Kenya shilling weakening slightly. We saw it weaken significantly on Friday, and you have to wonder, because at the same time you're seeing these inflows coming into the Kenyan equity market, at the same time you're seeing the unit becoming weaker. Is it a cause for concern? Could there be a rational explanation for this?
Yeah, I think what happened on Friday was probably beyond Kenya specific factors, because if you looked at what happened to the Tanzanian shilling, the Ugandan shilling, all of the currencies weakened, and at the same time, if you actually looked at Eurodollar, you saw Eurodollar drop quite sharply on Friday as well. So my summation from what I believe happened on Friday is we had a bit of a dollar rally come through. That fed through into the local currencies. There was some speculative demand for short covering of dollar positions. You had the riots that took place in Nairobi on Friday, but those happened after the currency started to weaken. So I think it's more coincidental that the riots happened on Friday, but not an actual trigger for the currency weakness. And then of course I think there were some stories that there was some energy sector related demand for dollars come through, and I think it all just sort of came together, and we saw the shilling jump, which was quite a big jump. It was 0.7, 0.8, 0.9% that it jumped on Friday afternoon.
Now, Roy, we're seeing at the same time the market now since January. Now, this is the overall market, the NSE 20. We're seeing up 9%. Now, you've got to begin to wonder whether there's perhaps some fruit that is coming into the market, and perhaps should people be thinking about maybe taking some money off the table? Is that happening?
Actually, most of the rise in the market can be attributed to foreign investors coming in. At the beginning of the day, they probably accounted for about 19% of turnover. By close of the week, that was on Friday last week, they accounted for about 37% of turnover. Yesterday, though it's yet to be confirmed, they accounted for about 50% of turnover. So far, local demand hasn't been strong from institutions, although from retailers there's been quite some demand. But I think it's a matter of time until basically demand weakens, and then we could see supply coming in and probably causing a minor pullback in the market. But our opinion is still that the market is generally bullish, but in between probably over the next 6 or so months, we'll be expecting some major rallies, but in between we should see some retracements in the market.